Good evening, everyone. Welcome to closing comments here on December 1st. Let's jump right into our charts and see we kicked off the new week. First up is the February live cattle. Today we did see the bears jump out and hit the ground running today. Prices moving lower right off that opening range and looking like the sellers are already getting the downside underway here. Prices opening up there above 218, briefly testing Friday's high and that 20-day moving average from below. Continued rejection down there right around that 219 mark as the bears started to push this thing off of that opening range. Most of that downside was seen in about the first half hour of the day, as we did see this thing push all the way down there towards 214.5. Throughout the remainder of the day, we did trade here in about a $2 range between 214.5 and 216.5. Staying down here below that bear pivot is a good sign for the bears, and this downtrend should continue as long as we remain trading down here below 217. Bears want to see this momentum carry over into tomorrow's session and get some more offers down here below 214.5. If we do see that during tomorrow's session, we should see the selling pressure resume and start to speed up. Look for the bears to swing this market all the way back down here towards 207.5. Last week's point of control is going to be the first stopping point to the downside here in this live cattle market. From there, we could see new lows come and see this February contract start to head towards that $2 mark. So look for the downside to continue here in the week ahead. If this market does trade back up here into our pivots and back up into these averages, we still expect to see selling pressure kick in some of these higher areas as well. If we do see this thing kind of rally back up into this area, but at the moment looking like the bears are starting off on the right foot here, and we should see that selling pressure resume throughout the rest of the week. Same story over here in the feeder market. Prices opening up here and trading around that 20-day moving average today, briefly breaking above Friday's high here during the early part of the day, but downside pushing all the way back down there towards 319.5. Once again, consolidation here in about a $2.5, $3 range here throughout the late part of the day. At the moment, the bears still remain in control here, and we did get a close down there below that bear pivot at 322, opening the door to more downside as we continue to see some rejection at this 20-day moving average. Big picture downtrend remains intact, looking like the sellers are already starting off this week on the right foot. If we do get more offers down here below today's low at 319.5, we should see the selling pressure continue, sending us back down here towards 305 and potentially back to that $3 mark as the bears are going to keep on pushing this market lower. Look for the downside to continue across this cattle market. Next up, our March corn futures rejecting those range highs here today. Prices pushing up there, falling short of that 450 mark before settling back near the low end of Friday's range. At the moment, we continue trading here in between 440 and 450, which is a pretty sticky and choppy area to be in for this corn market. Expect to see this kind of choppy sideways action to continue here until we can get a good confirmation break outside of either one of these ends of this range. So in the meantime, look for this corn market to be pretty happy camping around here at this 440 to 450 area. Next up, crude oil prices with a little bit of upside here today, briefly poking up above Friday's high. This market continues to follow this downtrend, this downtrend channel. At the moment, we do expect to see some more rejection as this market is trying to retest that $60 mark. This $60 price point has been a pretty comfortable spot as this market remains very choppy and still has very low levels of volatility. So expect the slow bleed lower to continue, or prices to continue trading right here around $60. This market has been up to that 50-day moving average about 4 times here over the last month or two. So if we do need to come up here and try and retest that 50-day moving average, we could. We do have a lot of selling pressure here continuing. No big breaks expected, but at the moment, this market just continues to slowly drift lower, and we should expect to see that continue here throughout the rest of the week. Next up, equity indexes selling off a little bit here today. Prices failing to get above that bull pivot up there at 68.65 and Friday's high. Prices briefly undercutting that bear pivot at 68.24, but a pretty choppy day session here as this market just went back and forth, briefly moving higher before settling back down here around 68.30 at the close of the day. Prices showing a little bit of rejection up here at the moment. We continue to see lower highs here and lower lows as this market still looks like it could be in corrective territory. This is a good time to be selective as there still are some names out there that are performing well and continue to see new highs, but these indexes still remain pretty choppy and look like they're starting to roll over here as a lot of these mega caps charts are starting to get pretty messy. Look for this downside to continue here and get this corrective move back underway after last week's light volume rally during the holiday week. If we do get more downside below 68.24 tomorrow, look for this price to come back here and start testing these moving averages. If we are able to see a higher low hold here throughout the week ahead, we could see this big picture uptrend resume, and then we'll need a follow through day to confirm the uptrend is back intact. But at the moment, still encourage everyone to be selective. Use caution here as this market still is in potentially corrective territory. But in the meantime, let's sit here and wait it out. We could see some more support down here at these averages, like I said. And a big thing we're going to need to keep an eye on is that follow through day. That's something that we're going to need to see before we can really commit to any major upside here. And so in the meantime, I encourage everyone to be hands off and very selective right now until this market has a little bit clearer picture for us. That's all we got for today. Thank you everyone for tuning in. We'll catch you guys tomorrow.